Okay. Well, again, thank you everybody for joining us today. My name is Brian Bonkowski, and I'm with ROI Payments. We are presenting Bootcamp number 2, entitled Mechanics of Enabled Electronic Payment. Go with the transaction flow. These boot camps are going to be recorded and have been recorded. If you'd like access to those recordings, feel free to contact us and or go on YouTube and search for it. Okay, as far as an agenda for today, first I'd like to welcome you to ask questions through the GoToWebinar interface, and we'd be happy to either address them during the presentation or hold them off into the end. For an agenda today, we're going to quickly review and recap who we feel is interested in payments. We're then going to go over a quick recap of Bootcamp number 1 from an ecosystem perspective, and then go into terms and terminology that we'll be presenting today. Next, we'll go into the market share for what types of electronic transactions are prevalent today and what you as merchants may want to look out for in the coming months, years, etc., as well as review what types of volume are expected from a credit versus debit versus ACH perspective. We'll then go into a deep dive as far as transactions go, the differences between a 4-party and a 3-party network, both real-time and non-real-time bank payments, and closed-loop and digital wallets, which are certainly coming down the pike, even though they may not be as prevalent today. We'll then go over some more notable trends, review some relevant acquisitions in the space that you may want to be cognizant of. Then we'll go through a quick wrap-up and Q&A session. So let's get started. As far as my story, I've been in the enterprise software space for about 10 years, and I got into the payments world about 3 years ago. And at the time, I had wished that there was a boot camp for me, which is why we're putting this boot camp series on. As far as who ROI Payments is, ROI is a tech consultancy focused on helping businesses maneuver through the payments ecosystem and drive business growth. The reason we put this boot camp series together is to educate the marketplace in terms of our knowledge of what is going on in the payments world, how transactions work, who the various players are, and how they intermingle with one another. In terms of who is interested in payments, we find this to be a cross-section of finance, technology people, oftentimes sales and marketing when you're going after new markets. It is an evolving landscape of who is involved in payments. It used to just be the finance people and the technology folks, but now it is expanding its reach as we see it in the market today. As far as why we're putting this boot camp together, we would like to provide you a basic understanding of how payments work, how transactions flow, and how this might affect your business and the bottom line, and hopefully resulting in an increased payments IQ for you as a reviewer. So let's get into it. The terms and terminology, again, these are going to be available online, and you can review from Bootcamp 1, the pre-recorded seminar, but for today's purposes, we're going to be quickly recapping the schemes, which are basically the brands, the Visa, MasterCard, American Express. The issuers are the credit card issuers. These are the people who are actually putting plastic out onto the street. The acquirers, who, as I'm sure you know, actually holds the paper for the merchants and is the banking partner for the merchants. The processors, who are incredibly critical to the payments ecosystem. They do all the back office processing. They're basically pushing the electronic paper from one party to another and providing the payments. And then the technology is basically everything else. Technology, to recap, is where we see a lot of the merchants actually interacting with the payments ecosystem. Now, for today's presentation, we're going to be going through an authorization. An authorization is basically a way for a front end for a merchant to hold the funds from a transaction for typically used in a credit or debit card transaction. capture settlement is the movement of those funds actually to that merchant's bank account. Actually to the processor, and the funding is actually moving it to that bank account. And a void in the refund is to basically remove a transaction from the network and refund the money. Okay, now we thought it might be useful for you to see an overall landscape of what is the market share for different payment types in different regions. So let's get into that. Interestingly, important to note here that in the U.S. and Canada, 62% of the market share is cards, credit and debit cards, whereas in the other sections like Europe and the emerging markets of Brazil, Russia, India, and China, it is significantly less. The direct debit networks are much more prevalent in those areas. As far as credit card versus debit card versus prepaid, noticeable, though still a small percentage of overall processing, prepaid is growing dramatically at a 221% increase year over year, and we expect that trend to increase. The reason being less access to credit. That's why the debit cards are growing so significantly, and the prepaid market is growing because the number of unbanked is actually increasing in our market as well. So now let's go into a deep dive of the various types of transaction flows. Now what you see here is a typical four-party system. About 87% of U.S. transactions flow through this system, and we'll get a little animation here. The four parties involved in a four-party system are the merchant's acquirer, the acquiring bank, the cardholder, and the issuing bank. And a typical authorization goes from the merchant. You're either in a retail location going through a point-of-sale terminal or a retail terminal, or online going through a payment gateway. It goes to the processor, reaches out to the issuing bank. The issuing bank then reaches into their database, seeing if that cardholder actually has the funds or the credit available for that transaction. It then sends an authorization back to the merchant saying yes or no, that transaction can or cannot be processed. The second part of the process is the capture and settlement, whereby the processor then pushes the relative funds pulled from the issuing bank via ACH into the merchant's bank account. So that is a typical four-party system. A three-party system, as you can see, let's build this slide out, is a much simpler mechanism, whereas the acquirer and issuer are actually the same entity. Less parties involved means actually a more visibility for the scheme. In this case, we'll take American Express to have exposure to both the merchant and the acquirer, so they can see both sides of the transaction. Think of this as why Amex feels comfortable issuing an unlimited line of credit to a consumer, because they actually have control over both the card holder as well as the merchant. Now let's get into the ACH network. Excuse me. Think of the ACH network as very similar to traditional paper checks. The network of deposits happen typically in a 48-hour sequence. This is very attractive to merchants because it's a lower cost transaction, typically a flat fee or a much lower percentage cost, and it may be a little bit less attractive to merchants because there's actually no authorization. The advantage of a credit and debit card network is they get an authorization code, whereas in an ACH transaction there is no guaranteed funds and no authorization. Now, in terms of bank payments in a real-time network, important to note here that these are not terribly popular in the U.S., but they are incredibly popular literally everywhere else except for the U.S., especially in Europe. You see on the right here, I've got a couple of logos. GiroPay is in Germany, EPS is in Austria, and Ideal is in the Netherlands. Basically, how real-time bank payments work, as at the time of checkout, a consumer is presented with a logo that is identifiable to them. Typically, nation by nation have their own types of real-time bank transfer networks. They then click on that logo. It brings them to a third-party site. You may think of this similar to working through a PayPal transaction where you're reverted to PayPal to log in using your username and password. But in these transactions, you're actually diverted to your bank, logging into your bank using your trusted username and password for your bank, authorizing that transaction, and at the end of the transaction, you're brought back to the e-commerce site stating that the transaction has gone through or it has not. These are significantly less risky for merchants to process these transactions because you're actually using your bank's login and password, and they're also less expensive because there's less risk in the transaction. We're going to be going over a lot more in terms of alternative payments, specifically real-time bank payments, in a future bootcamp. So stay tuned for the alternative payments bootcamp coming up in a few weeks. Closed loop and digital wallets. A closed-loop network does not need any third party to handle a transaction. Notable here is the Starbucks gift card. We feel the Starbucks gift card is probably one of the most prolifically used payment mechanisms from a mobile payment strategy. And interestingly, Starbucks is actually moving that to morph into its own payment network. So you will be able to use your Starbucks card to buy songs, purchase Wi-Fi, etc. Another closed loop or digital wallet would be PayPal. PayPal is by far the most widely used digital wallet in the U.S. As well as around the world. PayPal was basically born out of being a tool for eBay as small merchants, but it has grown to be a mobile payment mechanism and to be used even at stores as large as Home Depot. Now, our understanding is Home Depot, the use of PayPal in Home Depot is not as widely used, but being that the majority of the people on this call are merchants, you may want to look out for accepting PayPal and other wallets as they become available. So what is next from a digital wallet perspective? We feel that this is a place where a lot of innovation is going to happen and going to continue to happen. So Facebook credits, right now you can use Facebook credits primarily in digital games. But in the future, you may be able to use Facebook credits for actual goods and bring that into the physical world. Needless to say, there are a number of players out there in the digital wallet and closed loop space that can innovate faster than a traditional four-party system because they control the consumer as well as the merchant, typically them being the merchant. So let's go on to what we feel is changing in the marketplace. In regards to the digital wallets and how a three-party system may be able to be more innovative than a four-party system, changes are happening relatively dramatically in the payments world. Specifically, if you look at an ISIS for mobile payments, I don't know if anybody on this phone on this seminar has heard of ISIS, but ISIS is a conglomeration of the telco carriers and mobile phone carriers with the credit card networks, basically in an effort to increase their lost revenue from various sources. The important thing to note here is the agendas for each of the up-and-comers in the marketplace are going to be different, and these competing agendas are making the payments ecosystem much more interesting. You see Google here. Google's agenda is to aggregate data. Amazon's goal is to provide their own e-wallet and to be the #1 e-commerce provider in the world. So new business models are coming up. As mentioned, Google. I don't know if anybody on the phone has heard of Level Up. Level Up is a relatively innovative organization, also looking out after aggregating data to provide that data to larger merchants. And in doing so, they're offering basically free processing in the retail space. So it is our opinion that these e-wallets and closed-loop networks are going to expand and grow. And being that the majority of the people, again, on the phone are merchants, you may want to look out for them in the coming months and years. We want to go over a few relevant acquisitions that we see in the marketplace. The long and the short of it is it's very difficult to operate and to be innovative in a four-party network. So the credit card schemes, credit card networks, as well as technology partners are working very, very diligently to try to stay relevant, again, based on their own personal agendas to insert themselves into the marketplace. So as you can see, American Express, Visa, and MasterCard have made significant advances into mobile payments, into loyalty and gift cards. You notice there the PlaySpan acquisition by Visa. PlaySpan is an e-wallet or a gift card that is used specifically in the realm of digital games, and Visa thought it'd be want to stay relevant, so they bought PlaySpan to try to continue to compete in those games. Visa also made a significant investment in Square. Square, as hopefully you have seen here and there, is a hardware platform that plugs into your phone, whereby you can take credit cards in a relatively seamless fashion. Square is an aggregator, but Visa is backing Square because they see that may be a significant piece of the future for payments. Google as well has made significant investments in the peer-to-peer space, into the prepaid space. The Google Wallet, as I'm sure a number of you have heard about, but I would dare to say very, very few of you have actually used, is going to be an alternative payment scheme that we should look out for in the coming months and years. If we look at PayPal and eBay, PayPal, again, being the most abundant e-wallet platform in North America, is working to ingrain itself in the process and become more of a network in terms of not necessarily storing your cards, but using the PayPal rails, as we call it, to process the transaction. Basically building themselves as their own three-party network to kind of chip away at the volume that Visa, MasterCard, and American Express are doing. That being said, I would like to open this session up for questions. Again, this session was recorded and can be played again. And if anybody has any questions, please feel free to chime in with them now. Okay, well, thank you everybody for joining us today. Again, this session was recorded, as well as Bootcamp number 1, and look out for an invite to Bootcamp number 3 coming up next week. I'd like to thank everybody for their time, and look forward to speaking with you soon.